Hi there, it's Walter here from FX Jake, and I'm going to go over one of the trade signals that we had last week. I think it actually, even though it wasn't triggered, or it shouldn't have been triggered, it actually points out a couple of sort of nuances in Forex trading that I like to abide by. So let me just bring up the chart and show you what I'm talking about. This right here is the daily Swedish kroner, Euro Swedish kroner, and what you have here is a kangaroo tail. So the normal way to trade this is to say the high of the kangaroo tail is, it's down here. The high of the kangaroo tail is 8.8722. So I said on the last video, I said if it goes to 8.8850, I'd buy. The reason why I said 8.8850 was because it's got a 100 pip spread on this pair. So 100 pip spread seems like a lot, but again, remember on these exotic pairs, you just move the decimal over. So even though it's a 100 pip spread, it's really like a 10 pip spread because the pips are worth a tenth of a normal pair like the euro US dollar. So it's not really 100. It is a 100 pip spread technically, but it's like a 10 pip spread. So that's why I moved it, my buy stop, up to 8.8850. It only went as high as the next day as 8.8732. That means the quote on the buy price would have been 8.8832 or 100 pips higher. And that still was not quite at 8.8850, so it was just below that. But let's just say that you were still interested in this trade for some reason after it got up there and it didn't trigger it. Let me show you why, even if the market had gone that high during this candle right here, I wouldn't have taken the trade. Let me show you why. Let me go in here. What we have here is this is the okay. This is the kangaroo tail right here, from the red line across. That's the kangaroo tail right there. Let me delete this red line. And then here, starting at this candle, that's the day after the kangaroo tail. Now you've probably heard me say this before. I like to take my trades during the European or New York session. Does that mean I have to sit up and watch the chart during the European and New York session? No. In fact, for much of the New York session, if not all of it, I'm usually sleeping. So and usually the latter bits of the European session, I'm also sleeping. So what I like to see is I like to see the market actually trigger my trade during the European session. So what that means is here's why. 1, 2, 3, 4, 5, 6, 7, 8. These are the first 8 candles of the day. You'll notice that these 2 candles here made the high that went really close to the buy stop area. The buy stop would have been if this chart quoted this price right here, that would have triggered the trade because that's 8.8750, and of course it's a 100 pip spread, so that would have triggered my buy at 8.8850 if the chart tagged that level, and it did not. Now, what normally happens during the Asian session is you'll get the market going slightly in the wrong direction, and then during the European and New York session it will go in the quote right direction. And you can see that's what happened here. Over these first 8 candles, the first couple of candles went down a bit, then it rocketed up, and then here we have the European market comes in this candle, and then it goes down. And then the New York session comes in, it goes up a little bit, then it keeps going down. And it's still going down. And right now, during the Asian session, because we've got 1, 2, 3, 4, 5, 6, 7, 8. Got 8 candles here. The market is going slightly higher here. Oh, slightly higher here during the Asian session. But what will happen probably during the European session is we'll probably go against this. The market will probably turn around and it'll probably start falling. And you get this drift often. In fact, look at this. This is the kangaroo tail itself. During the first couple hours of the day, the market's just sort of up and down, maybe going up a little bit more. And then finally, here we go, boom, European session comes in and the market really rockets down. And it isn't until the end of the New York session that it rockets back up. And then we see it close right here. And that's the kangaroo tail itself right there. So I just wanted to point this out, that if you do see a trade and it triggers during the Asian session, that's not a good thing for me. A daily chart trade, I wanted to see it triggered in the Europe or New York session. And in fact, I usually just put my orders in after the end of the Asian session. Now, what some traders will say, well, you missed out on a trade. What happens if the trade goes without you in the Asian session? Well, that's a risk I'm willing to take, because I've seen many more trades trigger during the Asian session and then end up being big losers than I have seen trades go during the Asian session and then keep going and end up to be a big winner. So I want to miss out on those trades that are just slightly triggered during the Asian session, because it usually means it'll trigger and then it'll go into a bit of a drawdown. All right, I hope that makes sense, and I wish you very happy trading until the next video.